there was a strong bullish momentum bar, and we do not really have any sign of the reversal. And in terms of the continuation follow through, we have two more candle, although these two candles looks like exhaustion candle, and also demands just decrease slightly, and also progress to the upside decrease as well. So means that we really do not have aggressive demand to want to follow through, and is short-term overbought as well. And look at where it stopped. This is really the supply line of the down channel. Okay, so it's approaching the supply line of the down channel and just came out from this shakeout type of the movement. So this is just a counter rally and just reaching this supply line of this down channel. So it makes perfect sense for it to just stop right there. And then over the weekend, bad news happened, at least a headline. No resolution outcome from between the negotiation, Iran and US. So we have a gap down Monday. But look at this gap down. The news really is bad enough. So this is really just bad news, but look at the gap down, minus 1.25%. So that is actually not too bad at all. Just consider the move to the downside. And if you look at this candle, so whether you want to compare just the qualitative comparison or just the quantitative, look at this. This is just a super bullish momentum bar, strong momentum bar, and it could have moved all the way back to somewhere around here to even test 6660. So it doesn't really violate this bullish structure. It could have this kind of the test and then reversal, consolidation, testing, and to build up another structure to maintain this bullish structure and also the bullish momentum. But given the bad news, it actually just down minus 1.25%, and that's only the first hour, and quickly rally back up, cover the gap, and when the US market open, it just fill the gap totally and then just ramp up. So that is actually a bullish moment. So with all the bad news flying around, market seems to struggle from the news, from the bad news, and it just acts like nothing happened and is really just bullish. So not only the index behave like this, we have a lot of the strong stocks, a lot of the groups just move together. For example, the space team and the semiconductor, and also the photonic group and AI agentic group. So there's just quite a lot of the team under the big umbrella. The AI umbrella is just moved together and is super hot at the moment. So regarding this structure, so far we have a down channel. Okay, so there's a down channel, and we have a shakeout. So this is, I wouldn't call it a spring because that's just really too far. So consider that this is really just 1-to-1 ratio or even more. So that's really just a shakeout, and then a quick reversal, and then this is the sign of strength rally and breaking out of this down channel yesterday. So very strong rally. By far, this is really the best rally that we have ever have since the trading range formed. So where actually is the trading range? Here's a trading range that we need to look into. Okay. So this is a potential accumulation range. Although this down leg looks scary enough, okay, increasing of the volatility, increasing of the volume, supply level, but this shakeout and followed by a sign of strength rally really just save the whole thing, become a potential accumulation structure pending a breakout. Okay, so far this is still, as of now, this is a with an accumulation bias. for the trading range started in October with a change of character bar. So we have a uptrend after a change of character bar, and we have another attempt to go up, a change of character, and this really just sets the trading range that's lasts at least half a year. Okay, so now it's April, so started in October, now it's April, so it's just slightly more than half a year, and that's still considered as a bullish structure. So prior trend is up, so we have uptrend, so there's a prior leadership, trading range with accumulation bias, a shakeout type, followed by a reversal, kickstart a single strength rally. And right now, it looks like want to go straight to the previous all-time high level. So given a strong momentum, it's likely going to go to test 7,000, the previous swing high level, and followed by maybe a test, consolidation, build up a right handle before the breakout. So yesterday actually was quite a test, right? So I was guessing how the market would react to that bad news. So failed negotiation between US and Iran, and whether it could just get down 2%, 3%, or at the very least, I think it could still get to this 200-day MA, or even just there's a little gap right there. Okay, so 6650 somewhere around here, and to about 6700. So that's probably some of the worst case, and it could just quickly go back up and to keep the uh, consolidation and build up another structure. But instead of minus 2% or 3%, it just get down minus 1.25%, and it quickly reversed back in a second, third hour, and then eventually just fill the gap up. So that's very encouraging given the bad headlines. So when the market actually react, just struck off from the bad news, react positively, this is actually very bullish. Okay, so first bullish day will be this. Okay, the last Wednesday, so 8th of April. Second is actually yesterday. So this two bar here is a telltale sign. This market is very strong and they just ignore the bad news. And while there's actually no guarantee whether there will be any outcome between the US and Iran negotiation, but still, the market is very bullish and it's already priced in the worst case. So I think this is very important, and consider that we have plenty of the outperforming stocks in the outperforming groups to choose from. So I also sent out in a recent email regarding how to actually position while we have a monster rally. So in short, this is really the market that we need to be in, and not just go in or in like 100%, but you can put money in several tranches. So say for example 3 or 4 or 5 or even more, whichever you are comfortable with, and then just get yourself some exposure in the market and slowly scaling in until until we run out of the setups. So this is really the first sign. Okay, so we should really just get in with maybe 25%, 20%, 20 to 25% of the capital. Consider if you hold nothing, if you have 100% in cash, then this should be at least 20% right after the candle. So yesterday, when the market actually react positively, that should be another 20 to 25%. So by far should have around 40 to 40%, 40 to 50% of the capital in the market. And if we could have a pullback consolidation, I think this will be great for adding another 20-30%, and when it actually break out, then you can just add up the last 20-30%. So this is how I'm actually operating. So right now I'm slightly more than 50%. So in terms of the immediate direction, obviously since yesterday movement going up, momentum is still up, and the exhaustion of the upward momentum that I talk about in the email sent out on Sunday, and talk about potential retracement pullback to 6,700 or even 6650, somewhere around here, is already tested by yesterday bar. So right now the direction is still up, and we're likely going to see a test of 7,000 before we see a meaningful pullback consolidation, and hopefully it will initiate another breakout.